Two Bulls in a China Shop is brought to you in part by our sponsors and friends over at Manscaped, Trade Pro Academy, and Vonta Trading. Manscaped is the best in men's below-the-waist grooming with precision-engineered tools for your family jewels, and with a new and improved 2.0 version of the Weed Whacker now available, it's the perfect time to take advantage of our exclusive offer of 20% off and free worldwide shipping using promo code 2bulls at manscaped.com. As always, that is the number 2. And when it comes to institutional quality trading education, look no further than TradeProAcademy.com. In our free Discord server, you'll find instructions to take advantage of our discount with them as well. And for anyone trading futures, check out VontaTrading.com. Founded by Mr. W. Banks and Baba Yaga, they provide a ton of educational content with the focus of teaching aspiring traders how to build a repeatable, profitable process. Our exclusive discount code for Vonta can also be found in our free Discord server. We'll have all of those links and more in the episode description. Thank you for listening, and I hope you enjoyed today's conversation.
Finding great candidates to hire can be like, well, trying to find a needle in a haystack. Sure, you can post your job to some job board, but then all you can do is hope the right person comes along. Which is why you should try ZipRecruiter for free at ZipRecruiter.com/post. ZipRecruiter doesn't depend on candidates finding you. It finds them for you. Its powerful technology identifies people with the right experience and actively invites them to apply to your job. You get qualified candidates fast. So while other companies might deliver a lot of hay, ZipRecruiter finds you what you're looking for. The needle in the haystack.
See why 4 out of 5 employers who post a job on ZipRecruiter get a quality candidate within the first day. ZipRecruiter, the smartest way to hire. And right now, you can try ZipRecruiter for free. That's right, free. At ZipRecruiter.com/post. That's ZipRecruiter.com/post. ZipRecruiter.com/post.
Growing a business can feel like the Wild West, but there's a better CRM in town, HubSpot. HubSpot CRM keeps all your teams on the same page, so you can spend less time managing your software and more time connecting with your customers. When you hitch your wagon to HubSpot CRM, your marketing, sales, operations, and service teams all have access to the same data. Sales teams won't miss out on qualified leads, and marketing teams know where best to promote their offers. That's how the Wild West is won. Learn more at HubSpot.com. HubSpot. Grow better.
You are listening to an entertainment program put together by a company called Financial Ineptitude. Anything said on this show is not an endorsement or professional advice. Would you really want to tell a court of law you were suing us because you thought taking financial advice from two idiots on a podcast put out by Financial Ineptitude was a good idea? Really? Clown hat smiley face.
Well, hello everybody, and welcome back to the China Shop. I am your host, Kyle, and joining me for today's episode is the competent and charismatic Carley Garner, acclaimed author, senior analyst, and broker over at DeCarley Trading. If you'd like to learn more about today's guest, make sure you check out DeCarleyTrading.com, where you can pick up one of the 4 trading books she's written on commodities and Forex. We'll have those links in the episode description. And if you'd like to reach out to us with any suggestions, corrections, or questions for future guests, you can do that via email at 2bulls@financialineptitude.com, or you can join our free Discord server where a bunch of amazing people gather to share our struggles and lessons learned with other like-minded market aficionados. We'll have all those links in the episode description so you can peruse them at your convenience. But now that we've wasted enough time, let's get to know today's guest. Carley, how are you doing today?
I'm doing good, but it's Monday, so there's plenty of time for things to go wrong.
Kind of a sleepy Monday too, right?
It is. Yeah, it was.
So
But that's okay.
you are a commodities trader.
Well, I'm a commodity broker. And
Broker.
so I do on the side do a little trading, but my bread and butter is the brokerage industry, and we provide market research and commentary, trading ideas, that sort of thing to our clients
Hmm.
and guide them and help. The idea is, commodity trading is a really tough game.
I bet.
It's leveraged, and it's not like stocks. Stocks and bonds are relatively unforgiving because they're investments. You can put money in, and if you don't touch it for 20, 30 years, the odds are you're probably going to come out ahead. There's really,
Right.
it's,
Right.
that's how it works. So nothing's ever guaranteed, but there's a really, really good chance that's the case. In commodities, it's not like that. There's no income, there's no dividends or interest. It's pure speculation. And unlike stocks that generally go up over time,
Hmm.
commodities don't do that. If you look at a price, like look at a chart of crude oil, just since I've been in the business, when I got in the business in early 2000s, I think it was 2003, So that dates me a little bit.
A
I
little
take it
bit.
back. I think it was 2004. So
We can
almost
just
20
pretend
years.
13.
Yeah. So it's been a long time. So, but in my time, I've seen crude oil started around like $25, $30 a barrel.
Hmm.
It went up to $150 a barrel. Then it came all the way back down to 30, and then it went up to 120, and then it came back down to, at one point, if you're talking about the front month, it even went negative. So, I mean, the point is we've seen prices in this massive $130, $150 range, and it's hit both sides a couple of times. So it's not, if you just put your money in and forgot about it, you're not going to come out ahead, especially if you're talking about um, commodities are a little less convenient to trade than stocks.
Hmm.
Stocks you can buy and hold forever. Commodities have, they're basically futures contracts. So they have expiration
Right.
dates and you have to keep rolling, and that rolling works against you over time. So it's just a lot more complicated. Now, people love to talk about commodities and because it affects their everyday life. And some people do venture into the markets. It's not for everybody. So I'm not saying that everybody should get involved in commodity trading, but it's one of those things that for those that have the risk capital and have the understanding of how leverage works and things like that, it can potentially be lucrative, but it can also be, it's very risky. So you could also lose a
Yeah.
lot of money as well.
I learned that the hard way. I started my futures journey probably a year and a half, 2 years ago now. And yeah,
Okay.
I've learned most of those lessons just trading ES.
Yeah.
I have not tried to venture outside of that yet.
It's a tough game. It's a tough, for those, I mean, the thing is, it's kind of and this is true of almost anything in life. The people that manage to figure it out and do it
Hmm.
successfully do very well. They're the minority. The majority of people generally walk away with less than they came into it with. So it's a tough game.
Right. Well, I think a lot of people get sucked into the idea that it's a quick buck. Like it's always sold to
For
people as a
sure.
get rich quick type scheme. And I think the people who do make it are the ones that realize that, hey, no, this is a full-time job if you want to be successful. You have to work harder than 90% of the people trying to do this.
Yep, no guarantees whatsoever. And you're right. Trust me, you're absolutely right. This business attracts get rich quick, and I get a lot of people that kind of assume, they watched a video on the internet and they think if they open an account, they can just easily make 20, 30, 40% a year. Sometimes,
Right.
sometimes their
Right.
numbers are higher. And I try to explain to them. The first thing I always bring up is Bernie Madoff. He literally was running a Ponzi scheme because he couldn't find a way to make 10% a year, but people were scrambling to give him money to make 10% a
Right.
year. So why would we think we could make 30, 40, 50% when, it's virtually impossible to do that sort of stuff. Um, you won't hear that from most people. Most people are going to try to sell you and tell you it's easy, but it's not.
Well, that's one thing I noticed right on the headline of your brokerage when I was doing my research is a lot of focus on the honesty with the customer service, and it's kind of refreshing to see something like that.
Yeah, I mean, being a broker is really, it's an interesting position because the last thing we want to do is have uncomfortable conversations with people. So we want to make sure they
Hmm.
know exactly what they're getting into before they do it, as opposed to after. And so that's
Right.
that's our goal. It's a win-win for everybody.
I mean, it's probably not the way to make the most money, but it's the way to sleep at night and feeling like you're giving
Exactly.
somebody value.
Exactly.
I feel like we might have gotten a little bit ahead of ourselves. I kind of want to
Okay.
talk a little bit how you got into commodities to begin with. Did you start with commodities tradings, or did you kind of bounce around, like take the natural progression from like stocks to options, then futures?
You could say it was a natural progression, but I kind of did the scenic route in college. It took me a while to figure out what exactly I wanted to do.
Hmm.
Towards the end of, switched majors a couple of times. Originally I wanted to be physical therapist, and then I realized that actually involves like touching strangers, and that's not my thing.
Yeah,
So
no, thank you.
so I said, nope. So then I switched to accounting because my mom mentioned that might be fun, and it was absolutely not fun. It was the opposite of fun. So I ended up getting a degree in accounting, but I hated it from day one. So I knew I needed to do something else. So then I ended up getting another degree in finance, and that was what really was interesting to me. I originally wanted to be a stockbroker. That was kind of the goal. I did an internship
Hmm.
towards the end of my college career, and then I realized I kind of hate that as well. So I was just grasping
Really?
at straws, didn't know what I wanted to do. Well, it may have just been where I was. I mean, the
Oh,
basically it was
okay.
selling loaded mutual funds and that kind of thing, and it just I'm not a
Yeah.
salesman, and it's hard to sell something that people can, you know, they could do that by just buying a Vanguard fund. They don't need to pay a load. And anyway,
Yeah.
so I just kind of was randomly looking for something to do, and there was a commodity broker here in town, and so I decided to give it a shot. And um, it's something that keeps you interested every day. Every day is different. There's the highs are really high, the lows are really, really low. But I never get bored, and so I love it.
So, when I look at the name DeCarley and then I talk to you, Carley, like, were you one of the founders of this brokerage, or did they bring you on? That's just a happy coincidence.
Nope, it was planned. So basically, we opened as a two-man shop. Uh, the partner in the business is Tracy DeCarlo. Her last name and my first name, if you put it together, that's how we got
Yeah,
DeCarley.
yeah. Okay, that's what I thought. I didn't want to assume though. So, what were some of the hurdles getting that business up and going? Because I've talked to some people about like trying to start their own funds, and I've heard that
Mhm.
that is a huge pain in the butt. I can only imagine what goes into actually starting a brokerage.
Yeah, I mean, it's not easy. I'll tell you that. But I will say it probably was easier in 2008 when we did it than it is now,
Mm,
because things have
okay.
gone like the business has gone so um, self-directed and electronic. It would probably be really hard for a startup now. So luckily we got in before a lot of the shift.
Hmm.
That said, I just mentioned we opened in 2008. It was August of 2008. It was like a couple months before the financial crisis.
Oh
So,
yes, yeah, I
so,
remember.
so that was a little challenging. But I mean, our goal's always been the same. We've seen in this industry, honestly, most brokers fail because they come in with the wrong attitude. They're trying to get rich quick, or they're trying to sell get rich quick, and that just doesn't work in the
Hmm.
long run. And so we came in with a very long time horizon and a long view on how
Hmm.
we wanted things to work. And basically, the idea is keep your expenses as low as humanly possible. So, no fancy marble floors, in the penthouse office
Right,
in
right.
Chicago, that kind of stuff. We kept it really slim and just built it slowly, and it's worked out.
So what is the difference then, like on the broker side versus like on the trader side? Like what is like how does that change for you?
Well, sure. So I mean, as a broker, we basically make money as people trade. So every time somebody trades, we get a piece of the commission. Some will say, yeah, well, it must be nice being a broker because you make money whether your clients make money or not. And that is true to a degree. But the reality is, like, if we want to be in business for any length of time, we have to make sure our clients are happy, and clients that are losing a lot of money aren't necessarily happy. So it's in our best interest to make sure that they have all the tools they need, have all the information they need to hopefully get them in the right direction. That said, I mean, the last 2 or 3 years in commodities have just been just extremely wild.
Hmm.
Most people will kind of on the surface assume because crude oil has had some really big rallies and some really, some volatility,
Right.
that means everybody must be making a ton of money that's trading commodities. And it's actually probably the opposite is true, because there are so many unexpected things, and the markets got so dysfunctional when Russia invaded Ukraine. There was a mass amount of dysfunction, and anybody that was on the wrong side of it, or even on the right side but just with the wrong strategy, got completely run over. And what I mean by that is, I'll give you an example. When that occurred, when Russia invaded Ukraine,
Hmm.
the wheat market went limit up, which, if some of your
Yeah.
listeners may not understand what limit is.
Big green boner candle, I think is what we call that.
Okay, right, exactly. Yes. So some commodities, not all, but some commodities have a daily price limit, how much they can go up or down in a single trading session. And what happened with wheat is, this is kind of my opinion. I'm kind of speculating, but I've been following the markets long enough to know that this wasn't natural what happened.
Hmm.
So when Russia invaded Ukraine, the story was the world was going to be short wheat because a lot of Ukraine's known as the
Right.
breadbasket and blah blah blah. A lot of wheat is produced there, um, and all of those things were true. And wheat prices needed to go up. However, what happened was in this new day and age that we're living in, a lot of people have access to commodity ETFs. There's a commodity ETF that's
Oh.
I'm not gonna. I think the symbol's WEAT, so it's basically wheat, but it's an ETF. And what they do is they take money from people that are buying the ETF, and then they put that into the futures markets. Well, when you have just a ridiculous number of traders buying this ETF all at the exact same time, that money has to go by the perspective of the ETF says that money has to go to the futures markets within a period of time. So basically, in a nutshell, just to simplify, there was way too much money coming into the market
Yep.
that the market couldn't absorb it. And what was happening is every single day we were hitting price limits, but those price limits were getting hit after like literally 500 or 1,000 contracts were traded. It wasn't like 20,000 contracts were being traded and then it went at limit. So it was only a handful of people that were able to buy. So
Oh.
anyone that was caught short couldn't get out. Anyone that wanted to be long couldn't get in.
Oh my
It was
goodness.
just a complete nightmare. And so we had recommended a strategy to our clients where we were trading options, and it was actually a bullish strategy. The idea is we bought a call option and then we sold 2 calls above it. And so we were naked 1 call. That naked call was way above the market at prices that hadn't been seen in like 10 or 12 years at that point. And of course, they were seen very quickly given with all this thing. So we were starting to take heat on those and we bought futures against them. So on paper, that trade should have had 0 upside risk at all because we were naked a call, but then we bought a futures contract against it. Mathematically, we should have 0 risk. But what happened was the futures price could only go up 75 cents a day according to the exchange, but the short call options could go up an unlimited amount. So we were actually losing money on a strategy that should have had 0 risk. In fact, not just losing money, but like shredding money every day.
Oh
So
my goodness.
those kinds of really crazy. I'm not trying to scare anyone. I'm just trying to explain like that was such a dysfunctional time. And we had the same thing during COVID. We had with the COVID shutdown, we had the same kind of fiasco where things that should never happen happened. And unfortunately, if you're just in the wrong place at the wrong time, you probably get your head cut off. And so the last 2 or 3 years for commodities, although they've been spectacular in that we've had some really big rallies and a lot of volatility, they've also been pretty treacherous if you just happen to be in the wrong place at the wrong time.
That sounds about right. What is the reason for the price limits on the commodities? Is that just because they're lower liquidity and just to help stabilize? Is it kind of like the circuit breakers on like a stock on the exchanges?
They are circuit breakers, and that is the idea behind them. I personally, this is my opinion, I wish we did not have price limits. I think it actually adds to the volatility because once a market goes locked limit and you can't trade it, it interferes with the ability of market participants to rationally think about
Right.
things, and they start to panic. And when humans panic, there's literally no limit to what might happen. And that's what happens like in that wheat situation I just talked about. Every day it would go locked limit and people would get more and more scared because they couldn't get out of their shorts, or maybe they're some sort of producer that needs to buy wheat in the market and the
Right.
prices are going up and they can't hedge. I mean, it could be all kinds of things, but it breeds a lot of panic. I'm just not a fan of price limits. Maybe like some sort. This is just kind of off the cuff, but maybe like a compromise would be temporary price limits. Like if 75 cents is the limit, maybe stop it for 20, 30 minutes, let people catch their breath, and then kind of expand it on that day. The exchange does expand limits, but they wait until the next day to do it, or maybe even a couple days later. And by that time, there's just too much damage, in my opinion.
Yeah, it seems kind of silly to shut everything down like on the day. Yeah.
Yeah, unfortunately, they should I think that it's like ripping a Band-Aid off. If you just let it go, it's going to be really nasty for a short amount of
Right.
time, but it'll work itself out. But they don't listen to me. That's my opinion, doesn't matter. So
Well,
it is what it
you've
is.
got a more clout than we do. But I'll stand behind you.
Well, thank you. And while we're at it, if we're going to complain about stuff, I also am not a huge fan of 24-hour markets for I'm honestly almost anything. Maybe the S&P and treasuries make sense to trade 24 hours on the futures. But what we see sometimes in some of the commodities is the algos just run wild in the middle of the night because there's not a lot of liquidity and they can push things around. I can honestly say the worst part of being a broker is seeing people run out of money before the market goes the intended direction. And
Right.
I see this happen overnight all the time. So in other words, sadly, over leveraged traders that have positions on, throughout the evenings, a lot of times they get blown out because they literally just run out of money and they can't wire overnight. There's nothing they can do, so they have to get out of their position. And uh, I'm not kidding you. I don't know what it is, but it's like almost always once that happens, the market turns around and then just goes the other way. So it's really hard to watch.
I actually make it a point in my trading journal to write down when I get the breaks happen in my favor. Like even today, I think I got filled on a top ticket for a take profit. So like make a note, star
Perfect.
that, put that in the journal. It doesn't always happen against me. Here's an example where it worked in my favor.
Yeah. All right.
But yes, it does always feel like when the worst that can happen always seems to happen, doesn't it?
It does feel that way. Yeah. Too
So
bad.
you talked a lot about wheat. Gold is another commodity, right? That's one that
Right.
you probably pay a lot of attention to.
We do. Absolutely.
Is gold still like the go-to for inflation hedging, or has that
Um,
not really the case anymore?
the thing about gold is it's a really weird asset. So, just like any other, I mean, gold isn't something we eat. We don't consume it. We don't use it to run our cars like some of the other commodities. So, the only reason we don't use gold for anything, really, I mean, a little bit of manufacturing, but not much. It's one of those assets. It's kind of like baseball cards. Like it only has value because we say it does. But other than that, it kind of
Right.
doesn't.
Or money?
Yeah, exactly. I mean, but it does. The thing about gold is it's probably like if you pull up some charts and compare it to the stock market, it's not a very good. Some people assume, well, if the stock market goes south, I want to own gold because gold will go up. It really doesn't always work like that. In fact, most of the time it doesn't.
Right.
Same with inflation. Just because there's inflation, I mean, look at last year. Inflation was off the charts and gold just couldn't get out of its own way. It just melted down most of the year.
That's exactly why I'm asking.
Yeah, it's not very good inflation, but what it does do successfully is it's a diversifier. So it's just one more asset to have, a little bit in your portfolio to kind of so it's not correlated with everything else. That's what it is
That
good
makes
at.
sense.
Yeah.
Okay. Yeah, because when I heard you talking about the way commodities act, and like you mentioned, like the oil is the example. Like you can't just buy some oil and then sit on it for 20
Right.
years. And it seems like gold should fall into that same bucket. But you hear a lot of those gold bugs. They come out every 10 years or so. It seems like
Yeah.
they're trying to convince everyone to bury a bunch in their backyard.
Yeah, it's like that. And you get all it's an industry as well. To be
Yep.
100% honest, I mean, you see the TV commercials and the shops
Yes.
that'll buy your gold. It's an industry, and there's a lot of people that make a living on it, so it's going to continue to be like that. But the thing about gold is, in my opinion, it's one of those things that if you if and when it corrects really sharply, it's a good it's probably a good time to put something on and so that you have a portfolio diversifier. Other than that, it's just pure speculation. So, I mean, just imagine if you were someone that bought in 2011 when gold was at 2000 or a
Right.
little above, you'd basically barely be getting your money back. So,
Yeah,
and
exactly.
it doesn't hold dividends. And one of the reasons gold sold off so sharply last year is gold doesn't pay dividends. So if you're holding it, that's cash that's not earning you anything. It's just pure diversifier. But on the flip side, if you did the same thing with treasuries, you could at least earn some yield. And so uh, as treasury yields went up, gold went down because it just makes a little less sense to hold gold in that type of an environment. But I do, believe it or not, even though I've said all of
Ah,
these negative things about gold, I actually do believe we're really uh, setting the stage up for a big breakout here in the next handful of months. And the reason I say that is gold had every reason to go up last year. Stock market struggled,
right.
inflation, global political turmoil, all of those things, and yet it absolutely did not go up. It did the opposite. And so it just leaves all of those things probably need to be priced in. Now that the US dollar's corrected sharply, Now that things have normalized on the interest rate front, I think it just kind of will allow gold to break up above its all-time highs and maybe make a run. I'm not someone that's talking about, you'll hear crazy numbers out there, 4,000, 5,000. I don't think,
Yeah.
I'm not looking for that. But I would not be shocked to see 2,500, 2,600. So I think those are definitely doable.
That's funny. A lot of people have some really unrealistic expectations when they're trying to set up their trades.
Yes, they do.
I think that's probably one of the things I had to correct first in order to actually start turning a profit.
Yeah,
It's like, it's fun to get those home runs, but
for sure.
the base hits are what add up.
Yeah, and that's the thing. You don't want to be the guy holding out for, sitting on a huge profit and holding out for the last, 10% or whatever, and then giving it all back.
Oh God, yeah.
And that happens a lot. I agree with you. It's better to be, yeah.
Somebody mentioned something like, what's the risk to the reward? Like when you're at 95% of like your expected trade,
Right.
what are you risking to hold off for that extra little 5% bump?
Right.
And most of the times it's not really worth it.
No, it's not. We have a lot of option sellers on our books because we're not very many brokerages allow option selling anymore. There's reasons for it. There's some good reasons, but some bad reasons also. Option selling is absolutely not for everybody, and it's an art, not a science. But the only reason I mention it is if you sell an option, you have unlimited risk for limited reward. But the benefit, the reason people do it is the odds of the reward are pretty good. Like when you sell options, the odds are in your favor. Occasionally you'll get hammered, you'll be in the wrong place at the wrong time, but in the long run, the odds are in your favor. However, I see a lot of people that will sell an option. This is totally hypothetical. I'm just throwing numbers out there. They might sell an option for $800 and now it's only worth like $10 and they won't buy it back.
Yeah.
I try to explain to them, you still have unlimited risk. You have unlimited risk for $10. It's just not worth it. But for some reason, people have a hard time doing that, and I wish they wouldn't. We tend to kind of not encourage. That's not the right word. We do cater to option sellers. We make sure they have low margins and everything they need to do what they need to do, assuming it's reasonable risk-wise. I mean, we don't want them putting us out of business either, but we are very diligent in trying to encourage them to buy an option back. Like if you've sold an option and it's lost 70% of its value or somewhere in that vicinity, it's almost always a good idea to just pull in, get to the sidelines, because the longer you have your risk out there, the more the bigger the chance of you just being somewhere you don't want to be.
Right. No, that makes perfect sense. Are you talking about options like the standard ones or like on regular stocks? Or are you talking about options on the commodities?
Options on commodities.
Interesting.
So we only deal on futures and options on futures. So we have option sellers. Like we do offer, like you mentioned earlier, the E-mini S&P. So that's a futures contract. So we have clients that sell options on that. We have clients that sell options in oil, gold, grains, you name it. And we do a lot of like the recommendations that we generally put out to our clients, and we put ideas out. We're not necessarily saying everybody should do this, but it's a lot kind of an educational experience as well. And some of them act on it, some of them don't. But most of them are some sort of option spread that either collects premium or at least collects enough to pay for any long options that we're buying. I mean, it depends on the situation, but we aren't scared of having the risk out there of a short option, but I want to reiterate, it's not for everybody. Some people just can't handle it. It can get stressful at times, and it can get frustrating because sometimes your risk reward seems to be a little skewed. But the idea is, if you're participating in that strategy, you have to have a big enough account, and you have to have nerves of steel to ride it out. Because more often than not, the odds are in your favor. So if you just kind of play out the strategy, usually it'll come back a little for you, but not for everybody, for sure.
Well, and then you also have that 3% of the time that you have to be ready to cut, because that can wipe you out too.
It can wipe you out in a day. Yeah, I mean that's the thing.
Yep.
I mean, you could do well for 2-3 years, and then just literally one day or 2 days can take it all back. So you have to be very careful.
If you haven't heard by now, Manscaped now sells beard products. That's right. Once again, revolutionizing men's grooming with the brand new Beard Hedger Pro Kit. From a beard trim to a fresh shave, the technology behind the Beard Hedger Pro Kit allows you to shape your signature beard look. Now you can finally use Manscaped products to make your drapes match your carpet by going to manscaped.com and using code 2bulls for 20% off and free shipping. God damn, I was going to make that joke. Our friends over at Manscaped were kind enough to send me the Beard Hedger Pro Kit, and I gotta say, I was impressed with the quality and performance of the products. My thick, coarse beard hair has been giving me trouble with trimmers in the past, but the Beard Hedger was able to cut through the thicket without any tugging or discomfort at all. And because the trimmer has one rotary wheel with 20 length settings with only one guard, I don't have to worry about losing or breaking attachments anymore. So I've tamed my mane, and now you can too. No one likes a weird beard, so say goodbye to your stubble trouble with Manscaped's Pro Beard Kit. It all starts with that beard hedger that I mentioned. The thing's a juggernaut of fixing faces. Not only does it have the trimmer with the rotary wheel that gives you the 20 hair cutting lengths of just the one guard, it's also waterproof so you can shave in the shower and avoid all the hair in the sink. The titanium coated T-blade is tough on hair but smooth on your face, leading to a single stroke efficiency that brings satisfaction one stroke at a time. Phrasing. The Pro Kit doesn't end there though. They also created 4 dermatologist tested formulations for your post-trim care. First is the beard shampoo and conditioner. Gotta remember that all your hair is different. Beard hair, as I mentioned, is more coarse and easier to damage than the hair on your head, if you have hair on your head. That's why the kit has made shampoo and conditioner specially designed to moisturize, reduce ingrown hairs, replace natural oils, and promote beard health. Next, the kit has Manscaped's Beard Oil, an essential piece for your main facial accessory. No one wants a guy whose beard is brittle and dry. The oil relieves dryness both on the beard and the skin beneath while adding a little shimmer and shine, which makes you look extra fine. Cap off the kit with the Beard Balm, a pomade that shapes, styles, moisturizes, and tames for a sculpted look to attract any fellows or dames. The Pro Beard Kit also comes with 3 free gifts, a beard brush, comb, and scissors to ensure your beard is ready to impress. So get 20% off and free shipping with code 2bulls at manscaped.com. Of course, that's the number 2. That's 20% off with free shipping at manscaped.com using code 2bulls. Manscaped Beard Hedger, 1 stroke, 1 guard, 20 lengths.
Welcome to BreezeLine, where you'll say, "Ta-ta, T-Mobile, our home internet is just plain better. More reliable and faster because we put internet first. If there's network congestion, we won't slow your internet down like T-Mobile does to help their cell customers." And right now, you can try out a true internet experience with BreezeLine's reliable and fast fiber-powered home internet. Find your perfect speed with prices starting at $19.99 a month for 24 months. Terms and conditions apply. Go to breezeline.com to learn more.
Finding great candidates to hire can be like, well, trying to find a needle in a haystack. Sure, you can post your job to some job board, but then all you can do is hope the right person comes along. Which is why you should try ZipRecruiter for free at ziprecruiter.com/post. ZipRecruiter doesn't depend on candidates finding you. It finds them for you. Its powerful technology identifies people with the right experience and actively invites them to apply to your job. You get qualified candidates fast. So while other companies might deliver a lot of hay, ZipRecruiter finds you what you're looking for. The needle in the haystack.
See why 4 out of 5 employers who post a job on ZipRecruiter get a quality candidate within the first day. ZipRecruiter, the smartest way to hire. And right now, you can try ZipRecruiter for free. That's right, free. At ZipRecruiter.com/post. That's ZipRecruiter.com/post. ZipRecruiter.com/post.
So what is the benefit of options on commodities? Because, like, to me, an options product is like a leveraged way of investing in what you think is going to happen in the future on whatever the product is, or it's a way of like giving yourself some insurance in case it moves against you. But a futures contract is kind of the same thing already, isn't it?
It is, but the advantages and disadvantages of trading options on futures are similar to what they are in stocks, but the difference is, like, options on futures are leveraged products on top of leveraged products.
Right.
So it can be, I'll just give you like just a random example.
Okay.
One of our first clients way back, in the 2008 during the financial crisis, he took a $10,000 account. He bought a bunch of E-mini S&P puts. His $10,000 account in roughly 2 weeks, give or take a couple days, but this is the general idea, went from $10,000 to $500,000.
Oh my God.
So that's what the leverage can do for you. The same person, though, gave it all back in the next 2 weeks.
Yeah.
So that's how, like, if you're right, you can just, it's unbelievable, but it's unbelievable in both directions. So
Is it the same though with like an option where you're only risking the premium if you're purchasing them?
if you're, I'm sorry, repeat that.
So like if I buy an S&P or SPY put, I'm only risking the
Oh,
premium
yeah,
if I'm wrong. Is it the same?
it
Is it the
is.
same with the commodities options then too?
It is, however, like you are, it's a little different in the way that when it goes into expiration. So
Hmm.
commodity options at expiration, if they're in the money, they're automatically exercised into a futures contract.
Okay.
So it's possible if you buy an option and you just kind of don't forget about it and don't look at it and you happen to get exercised, it's possible you lose more than what you thought you were going to lose because now you're in a futures contract with unlimited risk.
Right.
But if you're paying attention, then no, you only can
Yeah.
lose
Yeah.
what you pay.
I mean, that can happen to
Yeah.
you too with options
Yeah.
and regular
Sure.
equities too.
Yep, absolutely. So as long as you're paying attention, yes, whatever you pay for that option's what you can lose. Sure. Uh, but yeah, actually, you did ask about advantages, so I'm just going to give you just a little spiel.
Okay.
So for someone that does want to get involved in option trading and maybe even wants to sell premium, again, I'm not saying everybody should. It's not for everybody. With all that said, the margins tend to be a little lower in options on futures. It depends on the product and it depends on the broker, so that's not a blanket statement. But the biggest advantages are they're taxed at a lower rate. So if you are trading profitably, and you may very well not be, but if you are, the tax rate on your commodity account is going to be a lot lower than it is in your stock account. It's a
Okay.
60/40 blend between long term and short term. Also, the options trade 23 hours a day in most markets. So I just got done telling you I don't love
Yeah,
that
I
idea,
know,
but
but it is
the nice
nice.
thing is, yeah, you have market access. So if something crazy happens in the middle of the night, you could take action. You could buy your option back. You could trade a future against it, whatever you want to do. Anyways,
Hmm.
there are some advantages to trading options on futures for for anybody that wants to do that sort of thing.
Yeah, that makes sense. I never knew. I think it just opened a whole new world up, and I'm probably gonna fall into a rabbit hole. Do you guys
Now
have
you know.
do you have anything on your website that kind of talks a little bit more about like how they work?
We do. So, honestly, the best resource is my book. I wrote a book that came out about 3 years ago. It's called Trading Commodity Options with Creativity, and it covers literally everything even things you didn't think you ever wanted to know about options. It's in there. And there's some horror stories and there's some good stories too. But so that's the best place. But you can get a lot of that information for free on our website. So DeCarley Trading has some articles. There's some videos on there that will kind of get your feet wet.
Okay, yeah, and it looks like you have a whole learning section that has a lot of
Yeah,
awesome content on there, and you also write a newsletter
yeah,
too.
I do. So the newsletters are free to our brokerage clients, but you can sign up for a trial and we'll give you like 45 days to so you can kind of see
Oh
what we're
wow,
doing.
that's an
Yeah.
extensive trial.
Yeah, well, I mean, we're not we probably put out 2, 3 newsletters a week.
Hmm.
So, yeah, it gives you a good idea.
Well, it really speaks to the long game that you talked about too. When you do a 7-day
Right.
trial, like, are you really going to know whether this information is
Right.
useful or helpful? Like 45
That is
days,
true.
you really know.
Yeah, you either know to just forget about us and delete us from your contact list or open an account. So that's the goal.
Well, judging from this conversation, I'm guessing most people stick around.
Actually, I mean, we've not to toot our own horn, but we do pretty well. But the interesting thing is, it usually takes people years to open an account. Like they'll be
Oh,
around consuming our educational content, asking questions, and then it's not something that happens in a week or two. It's in usually not even a month or two. It's usually a year or
I
two.
wonder why that is. Like, just the fear.
Yeah, I think that commodities are scary. And then if you've read any of my books, it's literally a huge disclosure. So, so I mean, it takes them a little while to get comfortable.
I mean, you can still play stops, and if you have good risk controls, I feel like you can mitigate a lot of that.
Yeah, absolutely. You can absolutely. A lot of it is it's how you approach the markets. And the thing is, the markets can be anything that anyone wants them to be.
Mhm.
So if you want it to be your entertainment and you're not worried about losing money, it can be that. And believe me, there are people out there that are like that. They just like the action.
Oh, I'm not surprised. Yeah.
But if you're looking for, let's say, a way to diversify your portfolio or hedge your portfolio or just do something a little different and speculate, like try to lower the leverage, I'll talk about this in a minute, but you can actually take leverage out of the markets by overfunding your account.
Wait, what?
So if you're looking to take it slow, you can do that. Most people choose the fast way, and that's where they get in trouble. They're either trading too much or they're taking on too much leverage, or they just underestimate the risk. That happens too, because to be honest, like I mentioned, just in the last couple of years, the risks, what we thought were the risks, suddenly we're just starting points. So I'll give you an example. There was a CTA. I'm not going to mention any names, but it was a pretty big shop, and they were an option selling shop. In 2018, they blew up their whole book of business. In fact, they took most of their clients, not only lost everything that they had in the accounts, but they also lost more than that. So like,
What?
for example,
How can you?
we know of some clients that had hundreds of thousands of dollars on deposit in their account. And literally it happened in a short amount of time. I mean, probably a week or 2 weeks at the very most, but I think it's probably more like a week. Their account balances went from like positive hundreds of thousands to negative hundreds of thousands. So it was a really,
Wow.
really big swing. And they ended up in situations where they owed the brokerage money, but the
Were they actually underwater on their positions, or was this just the broker?
yes, they were massively underwater on the positions. And the reason like it was a big operation. They were selling a lot of options at the same strike prices in illiquid markets.
Mhm.
And so what happened was a temporary price spike. It happened to be natural gas and crude oil. So they were short natural gas calls and they were short crude oil puts, and both positions went sharply against them
Right.
simultaneously. And when they went to start, there was really nobody to take the other side to buy back those options. So there was like just this huge price vacuum. And the reason I bring it up is if you look at a chart of like 2018 when that occurred, that actually it seemed like a big move at the time. But now, after we've lived through like 2020 and 2022, that was literally like a blip. I mean,
Huh.
it was a whole lot of nothing. So it's hard for me to look back and think that a whole CTA or like a giant fund blew out on that when just a few years later, those kinds of moves were seen like intraday. So
Yeah, I'm looking at the chart right now. Like,
yeah,
I mean, that looks impressive if you look at everything to the
it
left.
did.
You look to the right.
Right. Yeah. So you can see like just how wild. So what we saw like in natural gas in the last couple of years is something I thought I would never ever see, but sure enough, we saw it like just every day. It was complete chaos. So
Good Lord.
yeah.
Uh, how much of that is because of what's going on in Ukraine? I assume most of it. Is there other factors?
Yeah, so it started like if you're looking at natural gas, that big rally started in 2021. So it
Yeah.
started before the Ukraine stuff, but the Ukraine like exacerbated it, and then we had, obviously Europe was uh, going to bypass Russian nat gas and blah blah. Anyways, it just all fed on itself. And one of the things that contributed to it as well, and that people don't understand, is they call it a gamma squeeze.
Hmm.
So when a lot of speculators buy call options above the market, the market makers that are selling those call options to them have unlimited risk. And so what they do is they buy futures contracts to hedge themselves. But if a market just kind of melts higher, which is what we saw like in 2022 in natural gas,
I saw it with GameStop too. I think something similar.
yeah,
Yeah.
exact same thing, exact same thing. So the market makers are forced, or not even market makers, even other speculators that might have sold options, they're all forced to buy futures, and it just feeds on itself because people
Hmm.
start running out of money and there's margin calls and they're panicking and it gets out of hand. And so I'm glad you mentioned that. So basically, natural gas became GameStop for a little while, is what happened.
It's really interesting. I don't know if you ever watched that show, Madam Secretary.
I haven't, no.
Okay, this is going to seem like it's completely out of left field, but we're just talking about Ukraine and natural gas, and looking like when I look at this, I wonder if somebody maybe knew something beforehand. But watching that Madam Secretary, and it came out in like 2018, and they're talking
Uh-huh.
about a war in Russia with Ukraine Like almost like
Wow.
they there's a lot of events on there that they predicted. It seemed like, just going back and watching it now. Or
Huh.
I'm gonna have to go back and look at the timeline because hopefully I'm not
Yeah, that's
conflating it.
odd.
But it's just super weird to see that.
It is weird. Or maybe politicians watched that and got ideas and like
Oh no, I don't even
enacted. I
want to
mean,
think
who
about
knows?
that. Oh, I hope that's
I'm
not true.
not, I mean, everything's on the table at this point. Things have been so crazy. I wouldn't rule anything out.
All right, let's switch gears a little bit here. Let me go back to the education portion. You mentioned going to school and college. Were you able to learn anything about trading through school, like any of the actual courses that you took, or was that all kind of had to be like with a mentor and School of Hard Knocks, like do?
So in college, like in my finance classes, you learn the very basics, like
Hmm.
what's a call option, what's a put option, what's a futures contract, what's a stock. So you learn the basics, but I don't think those types of classes in any way, shape, or form prepare people for the markets. I mean, the markets, when I graduated from college, I expected everything to be explainable by math and an equation and logic, and that's like literally just
The
the
complete
opposite
opposite.
of
Yeah.
what reality is. I don't know. I think maybe as markets have become more electronic and more publicly or no more accessible
Right.
to the public, I think that the emotional factor has played a bigger part. So I mean, maybe 30, 40 years ago, they were probably a little more logical, but I don't know. In today's world, it's logic has nothing to do with it. Equations have, you can plug any numbers you want into an equation. It's literally meaningless. So no, you don't learn that stuff.
Well, it's more like, I always think of it more like quantum mechanics as opposed to like,
Yeah,
Newtonian gravity. Like one is
right.
set equations that are true no matter what, and the other one is more of like a string of possibilities where just about everything is possible, but varying degrees of probability.
I like that.
Thank you. Um,
Yeah.
I did talk to somebody who did learn about trading futures in college, but he did it in a way that I never would have expected. And it was actually through like a farming course,
Okay.
because they
Yeah.
have to learn it in order to hedge, or to be like, they teach them how to like purchase and trade products so that way they can actually like
Right.
get their products out, onto market.
Hmm.
It was the last place I would have thought that they'd be talking about how to learn how to trade commodities
Right.
was there.
That's actually that is probably a very valuable course for we deal with farmers a lot,
Hmm.
farmers and ranchers that are, obviously hedging their price risk. Unfortunately, I think that the majority of that community don't hedge at all, which is generally not a good idea
Hmm.
because in the industry they're called cash market speculators because they're basically just letting it ride to see what what the
Right.
market will give them. And I can see why they would want to do that because humans are optimistic and they always think their whatever it is they're producing is more valuable than
Yeah.
the general market thinks it is, and so it's just human nature. But I can say that it's hedging is a very, very valuable quality for farmers because I mean you can imagine just look at the price of wheat over the last year. We've
Right.
gone from $13 down to 650. So anybody that was and I've talked to some farmers that were unhedged and I mean the mindset becomes pretty I mean it's we're all wired the same.
I
Like
bet you I can
if
walk you right through the thought process. It was, it's going up. Why would I cap my upside? Then it's coming back down.
exactly.
I'll cap my upside when it gets back to this
Yeah.
price. And then it gets back to that price. And you
Right.
think, oh, it's going up. Why would I cap my price?
Exactly. That's exactly what happens because there again, we're human.
Yep.
That's how we think.
Yep.
And if you didn't sell at 10, you're in the back of your mind, you're like, well, I didn't sell at 10. I'm not selling at 6. And then you get to a point where you literally have to save the farm. So you have to
Yeah.
sell it, whatever. And so it's just a really vicious cycle. We've worked with some farmers that are very diligent in hedging. Like they're almost fully hedged all the time.
Hmm.
And you would think, well, that's too bad they missed out on all the fun last year. But the reality
They
is,
don't want that,
yep,
would they?
nope.
Yeah.
And they no, because I mean, they know their budget, they know how much they need to make and where their profit zones are, and they just keep going.
Hmm.
And honestly, good for them.
Yeah.
That's the way to do it. Yeah.
It's not the sexy way to do it. It's not the fun way
No,
to
it's
do
not
it.
as exciting.
But it's
Exactly.
the way to continue doing it tomorrow.
Correct. Yes.
All right. I noticed that you spend a lot of time on Jim Cramer's show. I'm curious how
Okay.
that friendship got struck.
So Jim used to own the street. He founded thestreet.com,
Yep.
and I started writing for the streets, sheesh, 12, 13 years ago, probably.
Hmm.
He ran across a couple of my articles and thought they were interesting, and so we started communicating. And he started asking me to write content for the show, like the charting segments. And I think we've been doing that for about 11 or 12 years now.
Oh
So
wow, it's been that long. How have I mean,
yeah, it's been a long, long time.
I don't really watch a whole lot of the media just because I don't know.
Yeah.
I don't trust
Oh,
anybody. I
sure.
prefer to
I
have
get
my
it.
own opinions.
And that's good. Honestly, it's information overload if you're getting
Yes,
stuff from all sides. Um, but yeah, I've been working with Jim for a long, long time, and I know some people have strong opinions about him.
I was gonna ask if you wanted to debunk some of those.
Some very good, some very bad. Honestly, I have never. He has been so good to me. He is like literally of all the people I've met in my life, he's in the top, like probably the top three of just high quality people. He's super humble.
Really?
He's very, very, very nice, and he's very generous. People don't get that by watching the show, but those are facts.
Well, I mean, and you host your own show, there's a persona that you have to kind of put on and lean
Yeah.
into, and I'm sure a lot of that is in his case. But the other thing I always liked about him, and even though I've given him a lot of flack over the years, he was the only person who ever stood up and like answered the call when Jon Stewart was complaining about the banking crisis. Jim Cramer was the
Hmm.
only guy that showed up on that show to come and talk about how it went wrong and the part he played in it.
Yeah.
And
Yeah.
that's pretty big. It's not easy to do.
He's a stand-up guy. He is. And he'll admit when he's wrong. And the thing is, people also have to realize, like, he does a show every day for an hour.
Hmm.
So anybody that's ever done live TV, first of all, it's really hard. I do it for in 3-minute segments at a time, and I always say dumb stuff. And afterwards, I'm like, wow, why did I say that? Because it's really hard. It's hard.
Hmm.
You just things come out of your mouth because you don't want, there's silence, and there's not supposed to be silence. So you just have diarrhea of the mouth.
Yep.
Also, if you're on TV every day for an hour, you're gonna be wrong. None of us can see the future. It is what it is. But I can tell you, nobody works harder and nobody cares more. And I'm not just saying that; it's absolutely true.
All right, I got one last question, and
Okay.
I will take to heart what you said, and I will be a lot kinder in my in what I
Okay.
say going forward.
All right.
Last question that I have for you then: which movie do you think gets the most right about trading commodities? Like, what's your go-to to show people what you do?
I always refer to Trading Places. Just it's my favorite.
I was hoping
I
that'd
don't
be
know if
it.
that's the most that's probably not the most realistic because they make it seem like we're all riding in Bentleys with chauffeurs, and that's absolutely not true. But that's a really great movie. So,
That's funny. Oh, that was the one I actually had picked too. I was,
all right.
what are the other good ones? What is another good stock market movie out there? Wolf of Wall Street?
Yeah, that one's pretty interesting. And that one, I hate to say it, but there's a lot of truth to that. There definitely are some.
That one's the scary truth, though.
It's scary, yeah.
Yeah.
There's some environments like that. I've never worked in places like that, but I've been to like Christmas parties, industry Christmas parties in like Chicago, and
Hmm.
I'm telling you, some of them are they're wild.
A lot of quaaludes.
It was eye-opening. So,
All right. Carly, this has been a lot of fun. I'm super glad that Eric was able to introduce us. I'm gonna have to probably try to bring you on. Maybe we'll have to do some more deeper dives into
sure.
commodities going forward.
Yes, it was fun. Thank you for having
Is
me.
there anything else that you'd like to leave the listeners with before we wrap up here?
No, I think we covered everything. I mean, if you're interested in learning more, I already mentioned DeCarleyTrading.com has a lot of educational material. You can sign up for a free newsletter and see if you have any interest at all. But even if you don't want to trade commodities or don't care about the commodity markets, if you're interested in Las Vegas or Beagles, I post a lot of stuff on Twitter. So check me out on Twitter.
Oh, I forgot. I was going to give you crap about being a Knights fan.
Oh, man, Saturday was painful. Oof.
It's such a tough one because I'm a Coyotes fan.
Oh,
And that's where my hatred comes from, is you don't get a new
yeah.
team and you get to go right to the Stanley Cup final. That's such crap. you
Oh,
got
that
you
was so
you
fun.
have to languish around in the expansion jail for 3 years minimum.
Yeah,
And now
I gotta
Seattle's
admit, I
doing it.
mean,
Ugh.
we're spoiled. The NHL's good at expansion teams. If you look at other leagues, they basically spend 15 years at the bottom of the
Well,
barrel.
that's how it
So,
used to be. They changed it
yeah,
for Vegas. In Vegas, when they put their front office team together, they just nailed it.
they did. Yeah.
All right,
So,
well,
yeah, it's been fun. I can't complain, but
hopefully,
sorry.
hopefully my team will.
Sorry, not
Well, my
sorry.
team is on its way up. I think we've been saying that for 20 years, but
Yeah.
next year is a new day. All right, before we dive off the rails completely into a bunch of hockey talk, we're gonna have to go ahead and say goodbye and wrap this episode up. I'd like to say thanks to everyone who stuck around to the end, and thank you very much, Carley, for coming in. The examples that you shared and the way you explained things made just very clear, concise, great information. I hope everybody checks out DeCarleyTrading.com. We'll also have your socials in there if people want to follow you, and links to the 4 books that you've written. You can check us out at twobullsinachinashop.com. We'll be back soon with another exciting episode, but until then, share this episode with your friends like it's an advanced copy of the USDA's monthly orange crop report, and take care.
Finding great candidates to hire can be like, well, trying to find a needle in a haystack. Sure, you can post your job to some job board, but then all you can do is hope the right person comes along. Which is why you should try ZipRecruiter for free at ZipRecruiter.com/post. ZipRecruiter doesn't depend on candidates finding you. It finds them for you. Its powerful technology identifies people with the right experience and actively invites them to apply to your job. You get qualified candidates fast. So while other companies might deliver a lot of hay, ZipRecruiter finds you what you're looking for. The needle in the haystack.
See why 4 out of 5 employers who post a job on ZipRecruiter get a quality candidate within the first day. ZipRecruiter, the smartest way to hire. And right now, you can try ZipRecruiter for free. That's right, free. At ZipRecruiter.com/post. That's ZipRecruiter.com/post. ZipRecruiter.com/post.
Two Bulls in a China Shop is an entertainment program, and all thoughts and opinions expressed in the show belong to the hosts and not of any company. They are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide entertainment about stocks in the financial industry of trading. If you make trades based on what you hear in this show, you assume all risks for those trades.